Tutorial 1. Continuation of accounting cycle topic. This is our lesson 5, where we are discussing about classification of personal accounts. It's a continuation of lesson 4, where we looked at debtors account. This is with Dr. Geoffrey Mbova of accountingnest.com. Most welcome. Now, in this lesson, classification of personal accounts, as we saw in the previous case, is divided into two types of accounts, namely debtors account and creditors account. And so in the previous lesson, we looked at specifically the debtors account. So in this lesson 5, we are focusing on creditors account. So here we go. So the big question is, how do we define creditors account? Now, creditors account is a personal account which represents the amount of money the business owes the supplier or the suppliers. That is the amount of money the business will pay the supplier in the future for the goods or services the business has bought on credit. Now, this creditor account, which is actually a personal account, is presented using either natural persons or artificial persons. For example, look at creditor Thomas, creditor Paul, and creditor Rosalind, just to mention but a few. These are examples of creditors of natural persons nature. Or we can also have an artificial case like the case of creditor UVW Limited, which is actually either a public limited company or a private limited company. This is an artificial person. Before the eyes of law, this creditor can own property, can sue, can be sued, or even can enter into contract in its own name. Yet it is a company, but it's an artificial person. Other examples can be, for example, creditor VX Enterprises, which is actually maybe a sole proprietor kind of a business, or a shop or wholesale organization. Alternatively, we can have another example like that of a partnership, whereby it's a kind of business which is an artificial person, like this case of union partnership. So let's now go further and look at further classification of creditors accounts. Now, creditors accounts are further classified into other classes or categories based on different criteria of classification. One, we have got, for example, the nature of goods purchased by the business in question. Now, when this criteria is used, we can have Roman 1, kinds of creditors whereby the goods dealt with or assets dealt with are of trading nature. Now, goods of trading nature are assets or properties bought with the intention of reselling them in the future, also referred to as inventory. Now, a good example is trade creditor. Now, trade creditor account is a personal account which represents the amount of money the business owes the supplier. That is, the amount of money the business will pay to the supplier in the future for purchasing goods of trading nature on credit. For example, we have got ABC Limited, which purchased inventory, that is goods, on credit from Anna amounting to $320. Now, in the books of ABC, you realize that Anna will be appearing as a trade creditor, or according to International Accounting Reporting Standards, the trade creditor term has been replaced with accounts payable. So in the books of ABC, remember this, Anna will be appearing there as an accounts payable. Now let's go to the second case, that is Roman 2, where we are talking about other creditor. Now, first of all, what are these other creditors? Now, this is other personal accounts whereby the business in question owes a supplier of some cash as a result of purchasing or buying other goods and services on credit. This is also referred to as other payables. Now, under this classification, under this criteria, we have got some specific criteria that are used to classify the accounts they are under. So, A, we have got a criteria whereby we are looking at acquisition or acquisition of services on credit. Already we had a case of acquisition of goods on credit, but this time around we are looking at a case of acquiring services on credit. So if a business acquires goods or services on credit, the arising account is referred to as bills payable account. Then B, we have got a criteria whereby the business acquires a non-current asset from a supplier, that is a creditor on credit. In such a case, then, therefore, we have what we call non-current asset creditor account. Then C, we have got business promise to pay. If we have a criteria whereby we are looking at a case whereby a business promise to pay the supplier the debt by using a promissory note, then this case will have a notes payable account. And then we've got part D, where we are talking of a criteria where it has to do with starting of a business, whereby the owners of the business contribute capital. In such a case, then the raising capital account is referred to as a capital account. A capital account, for information, is also a case of a creditor's account. So, the summary below represents now the subclass of creditor accounts that a business may have in its general ledger. So look at these examples I've given below here. They are covering the four cases, case A, B, C, and D. And then I've given only one illustration to take care of how we record these business transactions in the respective creditor's account. So here we go. In case A, the case of bills payable accounts, I've taken an example of BCD Electric Utility Service Limited, whereby this company was provided with electricity installation services by Bonfire Limited on credit amounting to $1,500. Now, in the books of accounts of BCD Electric Utility Services, you'll find that Bonfire Limited will be appearing in these books as a bills payable account valued at $1,500. Let's go to our case 2, that is case B, where we are looking at acquisition of non-current assets, a case of other long-term creditor account or payable. In this case, I'm looking at the case of CBA Limited, which bought a second-hand lorry from Katerina O'Sellers for $4,050 on credit. Now, the lorry was used by Katerina O'Sellers for the day-to-day running of the business activities, so that in the books of CBA, you realize that Katerina will be appearing as a non-current asset creditor amounting to $450 US. You see, then we have got a case C, whereby we are talking about the not payable. Now, in this case, I've used the example of Massey Company Limited, which got a loan from Apex Bank Limited amounting to $2,000 US, and it was payable within a period of 2 months. Now, in this scenario, you realize that we have given an extension of additional information where I've said that Massey was not able to clear this debt within the 3 months set, the 2 months stipulated, and therefore the managing directors of this organization requested for an extension of another 3 more months. Now, in this case, you realize that the directors did this kind of a promise using a promissory note. So we're going to look at 2 levels of recording of this transaction. First of all is initial case, that is before Massey Company Limited exhausted the set dates for repaying this loan. So in the books of Massey Company Limited, you realize that Apex Bank Limited will appear as an account payable, valued at $2,000 US. But then after Massey fails to pay within the set or stipulated time, with an extension of 3 months duration, using a promissory note, then the accounts payable will now turn to be a not payable account. Such that in the books of Massey, you realize that Apex Bank Limited will appear as a not payable account of $2,000 US. I want you to mark this, that when you hear of not payable, you realize it's a case whereby the transaction has taken place is a credit transaction, but then there's an extension whereby a promissory note was used to request for an extension of the repayment period. So the word not payable is borrowed from the word promissory note, not payable. All right? Then we go to case D, whereby in case D, the criteria is whereby the owners has contributed capital towards the start of the business. Now, I want you to note the following, that this case of capital contribution is always assumed by the learners or students, and even sometimes by the instructors, to be unclassified, which is not true. So it is always ignored when classifying ledger accounts. Now, for your information, this is an example of a personal account in the subclass of creditors account. So when one starts a business, he or she lends to the business, for your information, the cash contribution made, and therefore a debtor-creditor relationship arises. So let's look at an example. If we take the example of Hosea, who started a business with $130,000 US. In this case here, Hosea is the owner of the business, and therefore Hosea has lent the business $130,000. Many of the times when we talk of so and so has started a business, the issue of lending disappears in between our thinking. And so we assume that the money that was given to the business and the owner of the business are one and the same thing. This is not true. The two are two distinct, separate personalities, and therefore there is an debtor-creditor relationship created between the two personalities, that the owner of the business and the business itself. So, in the books of accounts of Hosea, in this case, we will now record capital account amounting to $130,000, which represents other creditors category. So now let's move to an illustration to substantiate how to record these transactions of credit type. And I'm taking an example of Shooters Company Limited, whereby on 11th February 2022, Shooters Company Limited purchased goods on credit from Philips suppliers for $6,000. So how is this recording done in the books of accounts? So in the purchases ledger or book of Shooters Company Limited, under personal accounts or other or trade creditors, you will find that these accounts is recorded as follows. We'll have trade creditor account, that is Philips suppliers, whereby the entries will be made as per these details. That is, on the credit side, we will record purchases amounting to $6,000. Remember, our materials and notes are available in our website accountingnest.com. Thank you.